in the moment, because I was the self-employed, a couple years into construction business, real estate. And I thought to myself, I want to be on the right side of that chart somewhere. So I started trying to put things in place and structure in my construction company so I could try to get there eventually. And part of the path that I've been on, but also, and that's part of how I went to a layer, because it helps with some of that structure and setup. So those were influential in just changing my mindset and thought process.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Andrew Long here on the show. Andrew, welcome.
Hey, thanks for having me, Neil.
I'm excited you're here. Say for the audience to say, who are you, where you're from, what do you do?
Well, I'm Andrew Long. I kind of do everything, all things real estate. I own a construction company, Lair Homes. So we build custom homes, and we also do renovation projects. I'm also a licensed real estate agent, and I've been doing both of those things simultaneously for the last 11 years, along with investing in some single family throughout that time. And then in the last couple of years, really have turned my focus in on commercial real estate investing and learning about that, and, been able to put together a couple deals with some of those strategies in the single family world and kind of matching the two. But yeah.
Really all things real estate.
All things real estate, yeah. Right.
Where'd you grow up originally?
Well, primarily Council Bluffs, Iowa. So we moved there when I was 10. I'll save you from the other first 10 years, but I was born in Dallas, lived in Virginia, then Council Bluffs, where my mom's from there. Ended up finishing grade school, high school there. Then I moved to Des Moines. I went to Drake University. That's what brought me to the Des Moines Metro. It's pretty much been here since 99. So this is kind of where I've grown up, I guess, really teenage years up until being in my mid 40s. But that's how I got to Des Moines. I played football at Drake, was very involved with fraternity, and ironically, I was on the cheer squad there as well, which some people would like, why do you say that? And I'm like, oh, it's fun. But
I'm just wondering how that's possible.
Right.
With given football.
Not possible during the football season, but during the basketball season. So I got to do that for the men's and women's basketball team. And then, of course, that was, D1, and they get to travel to the NCAA tournaments. Our women were really good back then.
Yeah.
Our men's team wasn't as good. But so that, it's kind of like a free spring break every year to go on to the NCAA tournament with our women's basketball team. But yeah.
What position did you play?
I was an offensive center. I, hiked the ball and did all the PAT and punt snaps. And I often tell people that my kind of claim to fame is I snapped a 62-yard field goal for Billy Cundiff, who went on to play in the NFL.
Amazing.
For several years and multiple teams, and played for my favorite team, the Dallas Cowboys, which was for about 7 years. And but no, it was kind of a fun experience. And now guys are kicking 64 and 70 yards like it's nothing. 62 back, 20 years ago was a pretty big deal. I think it's still the record at Drake. But
it's incredible. It
right.
blows my mind.
Yeah.
Yeah.
I remember lining up over the ball, and the guy from the other team was like, are you guys kicking a field goal? I said, you bet you are. Sure enough, we snapped it, kicked it, he drilled it. So
incredible. All right, so you graduate Drake, and then what do you do?
Well, I got my degree in teaching and coaching, so I didn't really have any, experience with anything real estate or any influence there. So I just went into the teaching and coaching world here in the Des Moines Metro. I did that off and on for about 10 years. Had a couple year stint in between my year 5 and 6. And I loved coaching, but I wasn't as passionate as I probably should be about teaching. And I didn't want to be one of those teachers that just stuck around for 30 years and just, that doesn't seem like that was fair for the kids. I'm like, I'm going to go. I actually went to seminary for a couple of years thinking that I would check out vocational ministry and see if that was something that I was interested in. I was doing a lot of volunteering with like Fellowship of Christian Athletes. I got involved that way. And when I was in seminary, my wife and her brother had some farm ground out in Adel and ended up selling it. Brother wanted to build on it and sell it to a developer. And so we ended up having some money that we wanted to reinvest. And we already had a townhome that we owned, and we had some money in the stock market. And of course that was in farm ground, which was just a form of real estate. And so my mind at that time, knowing nothing, I'm like, well, we should keep it diversified. So what should we invest in? Not the stock market. And asked a friend of mine, he said, have you thought about investing in real estate? And I said, not really. And he basically shared with me what he was doing. And I said, oh, well, that sounds interesting. And it was just investing in single family properties. He's like, hey, you could take that money and don't put it all in one property, but divide it up into, 2 or 3 properties for the down payment. And now you can have that cash flow and some of that. I'm like, okay, that sounds good. So I started on that path. Yeah. Bought 3 rental properties out of the gate, all in like West Des Moines area. They were kind of nicer. I would say they're luxury, but just a nicer area. Most of the people that were renting were easy to work with at the first, gate. And then 6 months after that, some friend said, hey, I know this builder who's growing business, needs help. Would you be interested in having a conversation? So I'm like, sure. That conversation led to the 3 of us starting a company called Crown Homes, which I eventually became the sole owner of after a year and a half of us not really being able to get it off the ground as a collective. So here I am. I'm now out of teaching and, still pursuing the seminary, but I was doing it voluntarily. We helped plant a church in Carlisle. And then while I was doing that, I was, starting this construction business, invested in some real estate. Eventually, within that first year of the construction company, I got my real estate license because we kind of went through the gamut of meeting with some realtors, didn't really find anybody that was, a fit for us. Not that there probably wasn't, but at that time, we weren't looking to be a production builder. So a lot of agents were really just kind of looking for like, hey, how many homes can you give me? And I can go stand in this development. And that would require us, taking down so many lots or having a takedown schedule. And we just a little more conservative than that. So we just, only did like 1 or 2 lots. And then of course, everything was busy in 2015 all the way up through really 2020 or even beyond. So a lot of those 1 or 2 spec or model homes we would do would sell either in process or shortly after we would have the chance to stand in it and try to cross sell to other lots and stuff like that. So we didn't really gain a lot of momentum that way. We're kind of like in between what I would say like would be like a custom builder and like a semi-custom builder would be. We're building more spec houses and stuff. But that's how we ended up kind of listing our own properties for a season and doing that. That was good for a season. And then at that same time, I ended up selling 3 of those first rentals I had and bought some stuff on the south side of Des Moines. Okay. And that was a totally different flavor.
Tell me what prompted you to sell those?
Just partnerships that was in that were, there was like me and another partner in the first rentals. And then as we were kind of, not that it didn't like work out, but they wanted to move in a different direction. So we just kind of split up what we had and sold those things.
Well, oftentimes you get into partnerships, you get into rental properties. It's not that things don't work out. Oftentimes it's that people have different demands for their capital.
Right.
There's just a different need or a different want or how to employ the capital.
Or you get into something you learn and it's like, oh, it's not really what I thought it was. And then you sell and you move on and maybe you go do a different route. And that same kind of led to a different partnership. And that partnership was another agent that I met at the Iowa Realty office. Him and I kind of clicked. He had a construction background, and we kind of just started teaming up between real estate and construction. And we just kind of had an informal partnership for our first year and then formalized that. And that's really kind of how Crown Homes got off the ground. But then we kind of duplicated this other side of there was Crown Homes, Crown Renovations, and Crown Properties. And we're starting to try to create this umbrella of like having rental properties as a part of our portfolio because markets change. And we want to be able to have a cash flow coming in from other investments. If we had to, we could sell, we could ride the downturn of a market, some of those things. So that was kind of what it was in theory. So it was kind of getting out of one partnership and then reestablishing with a new business partner. And he had a little bit more renovation background experience and was more of a gung-ho, like didn't really care like that the properties were necessarily on the south side. We'll fix them up and maybe the rents aren't as the same as like maybe they're in West Des Moines, but that for me I was fine with that. But I saw the difference between both like running a construction company. I didn't really have the time to be property managing and like handling different client needs, rental needs, so I felt like with my first 3 rentals, they were very they weren't very hard to manage. They could self-manage, paid rent on time. I had to chase people. Went to the south side. It was a little bit of a different story.
Yeah. It sounds like what were you getting rents roughly in West Des Moines?
Those were, I think those were like at that time, we were $1,600 to $2,400 a month.
All right, cool. And then you go to the south side, and what are you getting there?
You're going like $800 to maybe 1,200.
Where I was going is the property class difference. Look,
Correct.
it was very different between those two,
Right.
between the two assets.
It's kind of, there was, a lot of, we had two that were like townhomes and then one that was like a single family home. So we kind of had one, the single family home, someone was relocated like from a professional business. And then the other two townhomes were young professionals just out of college, establishing their career, but responsible. They usually had 2 or 3 roommates sharing a 3-bedroom townhome, and they were very responsible to pay rent and fairly clean. Stuff didn't break. Of course, they were newer property that helps out. And so you have all these little mix of things, and that just really helped me kind of realize at that moment, like, I don't really think I want to invest in this particular area just because I don't have the time for it. It's not that those aren't good investments or that those aren't good people to work with. It's just that you have to kind of find your own capacity and what's fit for you.
Yeah, there's competing factors in there,
Right.
time being the biggest one.
Right.
What you do, unnecessarily capital.
Right.
Time associated with how you got to manage it.
Correct.
Yeah.
Hey, Iowa investors, this is Ava Baukamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit legacyimpactinvestors.com to apply.
So did you keep those? What happened to those?
So my business partner there in 2019 said at the beginning of the year, he's like, I think God's calling me to go be a missionary in Lima, Peru. And that was something he went to school for, vocational ministry, but didn't find that right away out of college. And so kind of went to help plant a church on the south side of Des Moines, and then just did construction and felt the calling to go do that. So we had to work through an exit strategy, which then it was like at that point we had 5 properties. I call it 9 doors because one property had 5 units on it. Okay. We had bought on the south side of Des Moines over by the airport, and there was a shop in the back. It was kind of a unique property, I guess.
Sounds like it.
Consider like it, you could call it a multifamily property because it was above 4 units. I guess that was my first multifamily property, but we bought it because we could use the shop space in the back for our construction company. Sure. We converted the half of the shop space into office. The other half, we stored our equipment and tools, and that's kind of where we headquartered for a couple of years. And then as he exited, I kept that property. He took the other 4 properties, which were like condo townhomes on the south side. And so we just split up the company assets that way. And that's where, at the end of that year, that's when Lair Homes came along and asked me if I was interested in a business conversation. And that was at the time where, D.R. Horton had come to town and bought Classic Builders out. And now we have this national builder in Des Moines. Des Moines on the rise. We get lots of publicity about being the top 10 in this thing and that thing. And so I was like, well, I better see what they have to say, because I, did a little Google search. I thought it was, junk mail at first, but like the tagline in this email signature was fancy. So I was like, I should look this up, and found out it was like, looked like a national builder too. And I was like, well, geez, why do they want to talk to me? And lo and behold, but the thing that stood out to me was that they did have a national footprint between Canada and the United States, so North America, but they were solely focused on custom homes and renovations. And as I was exiting with my partner and I was going to be the sole owner of the construction company, you start thinking like, hey, what do I want to do with the company? And what vision do I have? And I wanted to move up in price point because we were kind of in what I call the middle market. We were building homes in that $300,000 to $500K range. Now those are probably $400,000 to $600,000 or $700,000 homes. And just sometimes a level of work that we put into those and the clients that we deal with, it wasn't my favorite. It was like, hey, I want my cousin Jim to do the trim and save $1 here and there. And not that I'm against that, but I wanted to work with professionals who wanted to hire a professional that would allow me to go do the work and not have to be in the middle of something. Yeah,
so that because as you mentioned, D.R. Horton was coming to town. It came to town. They just bought a firm here in town, taking over the construction company. Right. And I remember that era that everybody in the construction business was freaking out.
Yeah.
Because they're going, 20 people are saying, we may go under.
Right.
Because DR is coming to town, prices are coming down.
Right.
Their level of product for what they build is top notch. And they're the best in the country at the product level they build. And so I like your strategy to go, Cool. You know where I can go? Upstream.
Right. And that was kind of something that, it wasn't because D.R. Horton came to town as much as it like I'd already kind of experienced in that.
Yeah.
But I wanted to work we had originally set out in Crown Homes to be a little bit more of a higher end custom builder, but we kind of got squeezed into this typical market based on some advice, creating momentum and selling houses, and you got partners and you got to pay and put food on the table and all that stuff. So we didn't really stick true to our initial vision. Now I'm kind of like back to where I think that initial vision was supposed to be, but it took 11 years to get there. But it has worked out, I think, fairly well because I'm not in that price point where when we were Crown Homes, we were building in that price point. And at that time, the bigger builders were like, say a Hubble or Jerry's Homes. Greenland had come up pretty fast and doing some stuff, and Happy Homes. And all those builders some of them had been around the Des Moines Metro for so long. And they produced a certain product for a certain price, and we would be in that same price point in some cases, maybe putting a little bit better materials in, and you're standing in those homes and you're trying to show people these things. But for most of the buyers, they walk in and they can't tell the difference from one or two levels of trim or flooring or any of paint or none of that stuff. It was like, hey, this is new. It smells good. Let's buy it. So now looking back on it, it's kind of like, gosh, that's kind of what I think anybody that hung around in that middle market as D.R. Horton came to town. I think we've seen several builders and smaller builders just kind of get eliminated or go out of business because they can't compete, and then the market changes in the last 2 to 3 years. On top of that, I think there was Nathan Drew had put out a post on LinkedIn the other day, and he was talking about the market share that D.R. Horton is running now is about 35 or 38%. And so some of that was, he was saying, kind of due to the price point and some of the volume and just gaining traction. And I was like, well, the other part of that's like, I think you saw that smaller middle market builder has been eliminated in Des Moines. You used to have lots of companies like that.
Yeah, you're right. You used to have lots of companies like that. DR dominates it. You're totally right.
So anyways, yeah, that's kind of the life of building and real estate. And so I've hung on to that one property up until last year. I sold it, and I was kind of like, I don't really want to do any more single family because I wasn't seeing the cash flow. I could underwrite them to cash flow, but one thing went wrong, and it was like, there goes 6 months of cash flow.
Oh, look good.
So I'm like, but I didn't really, but I knew I wanted to invest in real estate. I knew that's a good vehicle, but I didn't know what that was going to be. And then the market starts slowing down into 22 and 23, at least for us as a building company. A friend had approached me and said, hey, I've got this ground up multifamily looking for someone to be a project manager on. I was like, well, maybe I could use the opportunity or, the money. And I was like, well, how do you define project managing? And really, he was looking for like a liaison between the GC and the investor group. And then I was like, oh, we need $500,000 in capital to get over the finish line for the raise to close with the bank. And I was like, okay, well, I don't know anything about that. I think I can do what you're asking me to do. And there was a guy in my Alaire network who I had kind of done an intro call with, and they paired us up together because we were both builders. We both invested in real estate. Well, a few years prior, he had started a Facebook group called My First Million in Multifamily. And I kind of just joined and followed along and see the little post over time. I'm like, that guy probably knows somebody who would be interested in this deal. It seems like a good deal, but I don't know what I'm talking about. But let me just call him. So I called him up. I said, hey, I have this deal. What do you think? He's like, throw it in the deal room. I'm like, what's the deal room? And he's like, well, it's a private mastermind. You pay to be a part of it, but there's other investors in there. You can share the deal. There might be people that have been interested to partner with you going on. And I'm like, oh, okay, that sounds interesting. And then he's like, coming from the single family side, commercial is a lot different when you're taking down apartment buildings because it's not as what you think. Like I was thinking, hey, if I ever wanted to go take an apartment building down that's couple $1 million or whatever, I would have to put the 20 to 25% down, go to the bank, get a financial colonoscopy, as I like to say. And until I thought I'd have the resources to do that myself, I wouldn't ever have thought of that, right? But he's like, if you can find a deal, let's say you can underwrite You can find, investor partners, people that can raise capital or people that can sign on the loan. He's like, it's really a team sport. And I was like, really? I was like, that sounds interesting. And that's like, I could get off the bench now and get in the game. So I was like, all right, I'm going to join this mastermind and just start learning about multifamily, which I did. And that's kind of the last 3 years. It's just been time learning, networking, connecting. I've been to several real estate conferences. I've even been to your real estate conference that you hosted a couple of years ago. Is how we met. That's kind of, of course, when I decided to jump into that, the market rates doubled.
Yeah, I was just thinking of that time frame going, it had to be in the exact time frame.
Right.
5-year treasury doubled inside of,
right.
6 months or whatever.
So, there's a lot of people that were in these groups and they got in and they whether they're an LP or a GP in a deal, they've gone to be a partner, and we're in 300 to 500 units now. We're in 1,000 units. Like, wow, that's really fast. Like, I'd said if I would have started a couple years prior, I probably would be in 300 to 500 units as a GP slim partner or whatever, and helping out with the deal. But the markets had changed. The deals started to dry up, at least good deals. So and I'm a bit more conservative, so I don't tend to just run into stuff. So that's probably part of it too. But there's obviously deals out there to be had, but when it's your first deal and you want to go out and execute and you want to put it in front of potential investors, you also want to be able to come through and do all that stuff. So been really close on a lot of decent deals in the past couple of years, but haven't been able to take anything across the finish line in the multifamily space, but have learned a ton about how they structure deals and that part. And then I kind of got to thinking like, well, geez, they can structure deals like that with investors. Why couldn't I do that in single family? And so I started putting together some projects that we could potentially do in our Lair Homes business that I could put in front of investors and offer them what I think is a pretty good return, but a shorter period of time. Because on a few projects in the commercial side that I went out and met with some investors, sometimes they were like, well, that 3 to 5 year hold, I don't really love that. Like, oh, okay. I didn't really have anything else to offer them, and so I kind of started to put things together. I'm like, oh, so like in one case, if I have a multifamily deal I could take to an investor, they might be interested in that 3 to 5 year hold. Or I'm like, hey, if that's not a fit for you, but I have this other single family deal and it's a 12 to 18 month hold. So it's, let's say, half the time. Would you be interested in that? Here's the returns on that. So I'm kind of thinking like, oh, I can offer more than one option for these investors. So I'm kind of in the middle of doing all of that right now, and ended up putting together one single family ground up construction home and then one like luxury flip where we got the construction loan, got an investor to back the down payment, and then partnered on the deal.
Yeah, that's a high-end, you and I talked about that a couple of times. It's a high-end flip, South Grand.
Correct.
Where are you at in the process now?
We've got about 3 weeks to finish it up. We're trying to put it in the tour of remodeled homes.
Oh, fantastic.
In the first weekend of October. Oh, it's a very tight time frame. Yeah, we started that probably middle of April, and then been just working on it all spring and summer.
Roughly, just to give people a sense of, we see high-end remodel, roughly where's that going to fall from a list price to?
It's going to...
Give me a range if you don't have any.
Right, it's going to be probably in that 2.4 range. I mean, in the South of Grand market's an interesting one, as I've talked about, but I've seen comps anywhere from 1.3 up to 3.8 million. Yeah. And when I did the comps at that time, that was 6 months ago. But I think that is a market where there's a lot of interest and demand, but not a lot of options, especially like something new.
So totally.
Right.
No, make significant demand, and there are no options, right? Nothing's getting built down there that's brand new.
No.
Unless you like a lot.
Right. There's a few of those happening.
Yeah.
Right.
But there's no more ground.
Right.
Right.
And people don't often in that, like people that are moving into that neighborhood, and sometimes they like the character and the charm and all that. They don't want to move into a house that they got to turn around and then renovate, and live through a renovation. Right. Yeah. So here we are. We're like, hey, we've got the house, we're renovating it, and now someone can actually move into it and not have to do that. But it'd be a higher price point for someone that's in that more executive level of wanting to move and be closer. So be in Des Moines. Sometimes people are moving from out of state, or people are just like, hey, this became available. And I actually had 2 people come to us during the process of that, and they said, this is my childhood home. I used to live here. Yeah.
Really?
They're one of them I went to school with at Drake. It was interesting. So that's kind of cool.
Yeah.
But yeah, it's, there's people that I think I've found in that neighborhood, just in Des Moines, like there's lots of generational, I think people like their grandparents lived here, then they gave it to their parents, and the parents have passed it on. It's like sometimes second and third generation of living in that same home. A lot of tight-knit community and stuff. So from a construction side of stuff, it's hard to bust into that community and be a remodeler that can, gain some precedence and, a name in that area.
If you're a house flipper, execute the burst strategy or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
What a fun, unique structure to be able to take the learnings that you acquired in that multifamily and then apply them to a high-end residential single family. The other project you mentioned is a ground up. Is that the one on the home show?
Yep, it's the one on the home show.
Show's happening, as we're recording this. And I mean, what a terrific, I love seeing the home show, the finished products, because you do see people like yourself out there doing something that's unique, doing something that's a little more, forward thinking and, forward trends. They give 11 awards out at the home show. And how many did you win?
Yeah, we ended up taking 8 of the 11. Thank you. Yeah, it was. We kind of, people in the process told us like, "Oh, you're gonna win some awards," and I'm like, "Oh yeah, well, like I'm kind of conservative, so we'll just see what happens when the people go through it." But yeah, we definitely put together something that stood out and has, ironically, we're doing this renovation south of Grand. We've deemed this new home. The name of the plan is called the Grand Revival. So we've taken like characters out of the old homes and put it into this new home. So like we have very high peaks. It's a Tudor style elevation with the trim boards, just like you would see in South of Grand. We put real hardwood floors into the house. So you got 3/4 inch hardwoods, 2 1/4 planks, red oak, just a clear coat on it that brings out the natural colors in it. A lot of trim details, everything, all the trim profiles are custom. It's wood trim, not MDF, really high quality products in the house. And then sprinkled out just different things that you would see in some of those older homes, like even down to like the bathroom tiles, like little penny tiles, like you used to see in the older homes, things like that. So we've kind of sprinkled a bunch of these kind of old charming features into a new home and kind of given a little bit of a modern look and layout and stuff like that. And then the house south of Grand too has been completely relaid out. Like it has a new home layout feel where the master bathroom has now turned into a true master suite, where we eliminated one of the bedrooms that became the master closet. So you can imagine it's getting bigger, and the bathroom got a lot larger, and we relaid out the structures on the second floor and even the kitchen and the layout and stuff. So we're excited to showcase that here in a few weeks. But yeah, both those projects were ones that I was able to put together based on the real estate background of working through commercial deals with people and seeing how people are structuring deals and saying, hey, why not? Why couldn't we do it with single family? And so we've gone out and done that. So
it's unique. Steve Jobs said you can never connect the dots looking forward. You can only connect the dots looking back.
Right.
You'll look back and go, here's where I got that. And here's ultimately how it got applied and played out. I think what a lot of people I talk to the circles I run in on the investment side, new construction homes never get spoken about. But when I think about what you do, specifically new construction spec is investing. Right. It is almost no different, right, than going in and buying a remodel house, doing the fix and flip thing. Hundreds of people do in the city, doing the same thing, just at a much bigger scale and much bigger dollars, because there is more that goes into that. Right. You got to put a little more thought and planning into it at the same time. Correct. That piece is really interesting that you've leaned into that.
Yeah. But that is kind of, like on the new construction side, I've learned through my Alair network, there are other people that have partnered with investors where they'll then the investors will put money in, the builder will build this, we'll call it model home instead of like a spec. Where in those markets, they'll sit on that model home in a development for a couple of years. Then the value of that home actually is going up as well. So like they're sometimes leasing that space back from the investors. So then the builder is paying, rent on it to have it be their home office. And that's just how some different markets work. We're not doing that here per se, but the idea of just partnering with an investor and that people out there would be interested in putting money into that and getting a return and just be different than maybe putting something in the stock market or any other types of real estate investments. Different ways to invest out there. I mean, once you start digging in, you're like, geez, there's so many opportunities and ways to do stuff.
Yeah. When you look forward, what's your way to invest? What are you giving thought to? Go, this is this path. It's not a South Side rental anymore. It's
right.
What?
No, it's part of it is being in the investor side. I'm putting these deals together. So I'm part investor and contractor in these deals. So I'm getting a percentage of that investment side. So I'm using my skill set as contractor and real estate knowledge and putting the deals together and then putting them in front of other investors where they're a bit more on the passive side of that, where they just see the deal and then I'm doing a lot of the heavy lifting of the work, and then we can control the construction side of it too as a partnership, which is nice. So I think moving forward, I would love to be able to do 1 or 2 deals like that a year just to put into the construction pipeline as part of stability. And then I want to continue finding opportunities in commercial. Sometimes it could be potentially ground up development, multifamily. It could be multifamily that we go in and fix and keep for a period of time and then turn around and sell. And then I'd love to look at even some of the commercial spaces where you're doing like triple net lease stuff. So those are some things that are on the radar. And, sometimes I want to go really fast and it just takes time to develop the relationships and go in and do something, prove the worth, make the return, go to the next project. And these don't just happen in, 2 to 3 months. This is a 12 to 18 month process.
I mean, given that interest rates have now come down, they've announced that we anticipate 2 more interest rate reductions this year. It seems like things are greener.
Right.
The light is getting brighter.
Right.
There's a ton of for opportunity to grow. Cool. Right. Now, we keep heading that path. If construction prices can come down, the apartment level projects are going to be a lot closer to getting to pencil.
Part of that's how I got into that. It was like, hey, here's a commercial project that seems ready to go, and I'm trying to analyze the underwriting and finding out it's just not penciling. If you put it in front of so many investors, and then it's like, okay, the market had changed so drastically at that moment. It just, fortunately that put developers and some people in a bad spot and whatnot. But yeah, no, I think sounds like, like for me, at least in the construction side of it, things slowed down at the end of 22, 23 was pretty slow. It's where I spent a lot of time learning and teaching myself a new skill set. And when your back's against the wall, you find ways to create opportunities and, not give up and keep, that's the kind of life of the entrepreneur investor you can probably relate. And so, but I'm looking forward to, hopefully, like you said, it looks a little greener and the lights at the end of the tunnel of this kind of slow down here. And I've heard, 26 into 30 is going to be pretty good. And then we might see another slowdown come 2030 is what some of the people are predicting. So, but hopefully we'll have another good run here in the next several years and be able to, at least for me, I'll be equipped with different knowledge and skill sets and opportunities to invest in some commercial and some residential.
Andrew, you ready for the final 3 questions?
Sure.
If you could give one piece of advice to your 20-year-old self, what would it be?
I used to party a lot when I was in my 20s, and I wasted a lot of time and money, and I would just tell myself not to do that. I mean, I'm so much further ahead when I don't do those things in life, so that's probably what I tell my younger self. I'm sometimes jealous of some of the younger kids that I meet that are in that teen and 20s, mid-20s, and they're doing the investing stuff that I'm doing now, and I'm in my mid-40s. I'm like, I lost 20 years, So I could have not been a fool back then, but that's one,
2 books that changed your life.
I would say the first one, well, the Bible is definitely an impact on my life, my relationship with Christ. That's important. Secondly, I read a book, 2 books, Rich Dad, Poor Dad by Robert Kiyosaki. And then the next book kind of, I thought, followed the line of his books was the cash flow quadrants, right? And in that book, he lays out the 4 quadrants, it's like, yeah. And so you're in the top left, you're employee, you work for somebody else. Bottom left, you're self-employed. You're happy to just be self-employed, but you do everything. Top right, you're the business owner. Maybe you have a little bit of freedom, but you're still working a heavy lot of the day-to-day. And then there's the bottom right, which is you're the investor owner, hands off. And that, in the moment, because I was the self-employed, a couple years into construction business, real estate, and I thought to myself, I want to be on the right side of that chart somewhere. So I started trying to put things in place and structure in my construction company so I could try to get there eventually. Part of the path that I've been on, but also, and that's part of how I went to a layer, because it helps with some of that structure and setup. So those 2 books were influential in just changing my mindset and thought process.
If you were cast away on an island for a year, you could only get 3 pieces of data about your business every month. What 3 things must you know every month to know how your business is running?
Well, probably would be, what's the revenue coming in on a monthly basis? What's the sales pipeline looking like? And what's the cash on hand? Those are the ones that we focus in on in our layer business. Yeah.
I've asked lots of questions. What's one question I did not ask that I should have asked?
I don't know. I feel like we covered a lot here. I don't have anything, to be honest with you.
We did go pretty deep. It's been great. Yeah, you've got a unique background and how you've been able to navigate, the construction world and then parlay that into an investment component. I think it's really interesting. And I think certainly in high-end flip, the south of ground stuff, I'm excited as can be to see that thing get delivered to market to sell. And then for you to go do it again. Right. I think there is a unique underserved niche out there.
Right.
And it does take having a person be too scary for me, for my flip world, because we didn't, high end was not something we never touched. But somebody who lives in that world, it's fantastic.
It's kind of the opposite. Like, a lot of people start out doing the flips and it's like smaller projects. Yeah. I've done one of those in our Crown Homes days and I learned a lot in that. But the only reason why I would do that in our Layer Homes business is because that's how our business is structured. We're not structured to go do like smaller flips because we wouldn't be the best contractor for that. Like, there's better organized and quicker processes. That's why I always tell them, because sometimes other investors come to me because I have a contractor about like, hey, would you work with us? And like, I would love to, but I don't think I'm the right contractor. And my pricing would be probably not in alignment with what you need to hit your numbers. Because I've learned that there's certain guys out there that's their sole focus and their bread and butter, and they just kill it doing that. And that's who you want to partner with. Yeah. So just knowing your lane and staying in that. And that's why I chose the kind of the higher end, and we could run that through our construction company in a layer, and then but I wouldn't do the opposite.
Yeah.
So
yeah, exactly. For people they want to find you, follow you, connect with you, where can they go? What should they do?
Well, you can obviously search me through Facebook, Andrew Long. I'll probably pop up. I'm also on Instagram. I go by Catalyst Connector because I tend to be able to connect people and things, and that's kind of my superpower. And then I'm on LinkedIn too, so you'll find me on LinkedIn, and you can search through Andrew Long, a layer Des Moines, or it'll pop up. But yeah, those 3 social media avenues are pretty easy. I get lots of messages from people who want to connect and respond regularly. So yeah.
Good. We'll put a bunch of links below in the show notes for everybody for them to. Andrew, I appreciate you taking the time to connect.
All right. Thanks for having me, Neil. This was fun.
It's great.
Thank you.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? Does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another island who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the 2 of us to get on the calendar and connect. Until next time, keep investing in Iowa.